Hi everyone, welcome back to the channel. This is Full Stack Investing, where I'm tracking my financial journey towards hopefully financial independence before 40, and in the meantime discussing everything to do with tech advances, AI, and indeed the full stack of cutting edge technology. And since this is one of the first videos on the channel, I'm going to start off by giving you an overview of my portfolio so you know where I'm starting from. I'm going to talk a little bit about my investing journey to date and my plans for the future, which hopefully will give everybody something useful to chew on. So I'm now 30. I've just stopped being young in my mind and in the eyes of others. And I'm at an interesting crossroads where I've now been investing for around 5 years. I've learned a lot, so I think I have something useful to share through these videos. And I've built up a relatively sizable portfolio where it actually matters now. Back when I was younger and it was just a few £100, maybe a few £1,000, the changes didn't really feel that meaningful if the market went up or down, and geopolitics didn't hit me in the same way. But now that I've been compounding and growing for a long time, making a bad turn would be a really seriously negative financial outcome. And in contrast, getting things right, predicting the future, picking the right investments could be quite transformative. And so maybe these videos will document a particularly interesting period of my life. And I'd love to hear what you guys are investing in, so do drop that in the comments if you want to share. So right now, the full stack portfolio, as I'm going to call it, is up at around £370,000, which you can add about 25% to that if you're over in America, or usually think in dollars. And that's all being generated through my income, my savings, and of course my investments. I'd need to sit down, maybe in a future video, we can go through the years and look at my compounded rate of return. But it's something around 40% or so compound or rate of return over the last few years, which I think is quite good. Obviously, we've been in a bull market for almost all of that time, so the real test will come when we enter a genuine bear market. But with AI, that could be quite a while. So I'm trying to tell people that this is a really good time to be investing, and I'm really definitely glad that I've been investing over that time and not just have my money sitting in a low interest bank account getting eaten away by inflation. So it was definitely the right move for me. This is not financial advice, by the way, but yeah, if you do this properly and you take wise, sane decisions and you have patience and emotional maturity, you can definitely do well investing in the stock market. And people who become financially free at a young age generally will be doing this. It's not as risky as people think, and hopefully I can prove that to you. So what do I hold currently? Currently, I'm mostly split between the biggest company in the world, NVIDIA. I have a lot of Micron, which is a high bandwidth memory chip manufacturer. And then I hold a whole series of smaller positions in companies that are more speculative but interesting, like the AI sort of data center backed with sovereign power called IREN. And so basically they have fully renewable power, like a hydroelectric dam or something, and they connect that up to a data center where they bought a bunch of NVIDIA GPUs, and then they run a neo cloud service, as it's called. And I also have CoreWeave, which is a competitor of theirs. They're a bigger company with a huge backlog of hundreds of billions of dollars in contracted revenue at this point, but also a lot of debt. That's often the problem with these companies. And then what else do I have? I have a smaller amount of ROCKETLAB, a smaller amount of Palantir, and a reasonably large position in the plastic recycling company ADURO Clean Technologies, which is definitely my most speculative investment and a bit different to the rest of the theme in the portfolio. And we can talk more about that company another time perhaps, but it's performing relatively well for me. And some of these companies I've now held for quite a while. So NVIDIA I've held for around 2.5 years, and it definitely has performed well. Until recently, I did hold AMD, which, if you're into this space, you will have seen has gone up dramatically recently, which is why I sold it. I had made a very healthy return on AMD, and looking at the fundamentals, the price to earnings, forward earnings, I thought it seemed historically overvalued. And with AMD, I'd sat through so many ups and downs of seeing it go up and then come all the way down again, that I decided to sell this time and lock in. And of course, it's gone up a lot since I sold it. I sold it around $303, and now it's like 460, which is crazy. I guess there's lots of hype around the CPU shortage that we seem to be entering. I'm doubtful that it will escalate AMD's earnings to justify the current price in the short term, but maybe in the long term, I think it's still a very good company. I just thought there was more value elsewhere. And yeah, okay, maybe a little bit would be useful for you guys to hear about my investing journey. So as I say, I started around 2021, 2022. I met my girlfriend and decided to get much more serious about trying to build up, my wealth. I'd been a PhD student at Cambridge for a while, and for some reason, when you're at university and at Cambridge, money doesn't feel real. I was going out and spending everything, the small amount I was making from the small PhD stipend, on salmon and coffee and going out drinking and things, and it was good fun, and I don't regret it. But I wasn't building up any wealth. And as soon as I set my attention to thinking, okay, how can I build up wealth? When you sit down and do the numbers and realize, oh my gosh, at the rate that I'm earning currently, at the rate that I'm saving, I won't be able to afford anything. If anything goes wrong in my life, I will have no backup fund and everything's going to go to hell. So building up, financial independence eventually, and building up a backup fund in the meantime, and growing your wealth is quite a serious thing once you start to think about your life in terms of having any responsibility towards others, yourself, possibly children, etc. And investing, having researched it in massive amounts of depth, I've been very obsessed with it over the last half a decade now. It's definitely the way to go to get there quickly and safely, because you've got all these companies, they're generating fantastic products that people want. And then as people start to buy those products, the stock will go up. So as long as you're investing in sectors that are expanding, in companies with a moat around which competition isn't just going to knock them off, and with good leadership and with good robust projections of earnings, you can quite confidently put your money in to a number of companies which are growing and increase the value of your initial investment. And it's a genius thing to do, really, right? You can just go onto the market and take ownership of some of the most exciting developments in the world today. And I had a bit of a false start, I would say, where I went through and I tried different styles of investing, because the things that might come to mind if you're first getting into this would be, am I trying to get dividends? Am I trying to get really quick growth? Am I trying to get hyper growth and trade it day to day? And with small amounts of money, and I would recommend doing this for anybody just getting into this, I did experiment with all of these. So I tried some really high dividend companies, like Legal in General. I tried day trading on apps like Free Trade and Trading 212, trying to predict what the price movements would be. I wouldn't recommend that at all. I think statistically, you're basically guaranteed to fail, and you may just get frustrated because you're trying to get returns quickly, day to day, and that will cause you to chase risk, to chase companies which are just riding hype, and you're probably going to end up being a bag holder in something which you picked and which didn't have any good fundamentals behind it and just collapsed. We can talk more about trading another time, because my approach now kind of is a hybrid where I do hold for the long term, but sometimes I'll make short term decisions. But yeah, day trading, wouldn't recommend. It's not a get rich quick scheme. It's probably just a lose money quick scheme. And the dividends, they're fine. They're stable, but you do often have to pay tax on them beyond a certain point, so they're not that efficient. And ultimately, it's the sort of thing you do once you don't want to grow your money anymore, once you just want to convert that into a stable return without shrinking your overall net worth. And so I wouldn't really recommend dividend investing if you're young, if you're 20s, 30s, you're working, you have a alternative income. What you really want to be using the stock market to do is to compound your wealth and become richer over time, so that you're well positioned in the future. And so yeah, I had a few of those, didn't keep them in the end. And then I started looking for growth companies. And there's two different ways to do that, in my mind, broadly speaking. You can either look for something which is just organically growing, perhaps a new company, a new sector, a new technology, or you could look for an age-old company which has had good prospects historically, which has maybe had a bit of a downturn for some reason. And the downturn could be genuine. Maybe the company needs to be turned around by a quality new CEO or a change structurally in the economy, which is going to benefit that company. Or a company could just be undervalued randomly. I wouldn't say this happens a lot of the time, but sometimes the market will misprice things. People will make the claim that the market, due to this kind of collective consensus of people making different decisions, is hyper efficient and prices things correctly. But then you see price movements in stocks recently, like Micron, which, as I mentioned, is this high bandwidth memory producer, which is vital for AI. And there's a massive shortage in the amount of memory that's being produced. So the pricing power is going up for those companies that do produce memory, and their profits are going up. And with no change in the profits and the projected earnings over the last week or so, Micron has now jumped up massively, and it's still undervalued compared to most of its peers in terms of the forward price to earnings ratios. And that is not really a logical thing. That's not the market being hyper efficient. That was, you could definitely see value in that company last week, and now it's gone up a lot since then. And I think it still has lots further to go. And conversely, sometimes you'll see companies spike up based on a lot of hype to price to earnings ratios of thousands and then come back down into the hundreds or tens, drop by 90, 99%. That wasn't hyper efficient pricing. It was kind of random intersections of individual investors being hyped up on something, or maybe algorithms getting carried away. So that you can exploit inefficiencies in the market sometimes. Again, it's important not to day trade, and it's important to make fundamentals the sort of heart of that. And so, yeah, I think my full start was that I spent maybe a year and a half to 2 years holding companies where I was doing a kind of turnaround play idea, where I picked companies which were very, very solid, long term, robust, like Disney, Coca-Cola, and so on, and trying to pick them, or I basically thought that they looked undervalued relative to their historical returns, where say they'd grown at a certain rate over the course of decades, and recently they've been a bit stagnant. It seemed like a good time to jump in. And I don't hold any of those companies anymore. I don't think they're the most exciting or fast growing sectors. It definitely wasn't a terrible investment in the sense that I did make a small return over time. And I think recently maybe those companies like Disney are picking up a little bit. But it wasn't enough for me. And I definitely have done a lot better since moving my attention to sectors and companies which are a bit more volatile, but also are growing much, much more quickly. And I think the big turnaround for me has been becoming basically a tech investor, where now I'm picking companies that I research deeply. I try and understand their position in the market. I'm looking for companies which are growing quickly and are benefiting from the AI infrastructure build out, like NVIDIA, like Micron, like AMD, and IREN and CoreWeave. And that has been transformative, really. That has really accelerated my progress. And now every spare penny that I get goes into those companies, hell or high water. And I basically have a very simple process where if the market has gone down and nothing structurally, fundamentally has changed for those companies, I buy more of them. And then even if they're going up, I still buy more. Just I buy less more. If that makes sense. So I don't put in necessarily 100% of my savings every month, so that I build up a cash pile, which when there's a downturn, I then inject most of that. So most recently during the Iran war, when things were looking terrible and everybody was panicking about the end of the world for stocks, I hoovered up a few more. And that seems to be working fairly well for me. So I keep it simple. I'll talk more about my strategies and approaches in other videos. But really, the core of it is that you've got to be extremely emotionally stable. When you see your portfolio drop by 5, 10% more, you just have to shake it off. You've got to, and the only way you're going to be able to do that, by the way, is if you're actually got the fundamentals behind you. If you know that these companies are on an excellent growth trajectory, they're making money, and they should be worth more in the future than they are now, all else being equal, then you're very comfortable seeing those downturns. And eventually you begin to think of them as opportunities. You start to get excited when they go down because you know you can buy more cheaply and you're going to make that money back in the future. But it does require a really fundamental rewiring of your brain. And a lot of the times, what people have told you to think about money and how you intuitively want to think about money, because it requires optimizing for the long term, not the short term. And that's not always emotionally easy. And let me tell you, I've had some roller coaster rides watching the markets over the last 5 years or so. And so that's pretty much it for today. I'm going to be doing these regularly, so I'll keep you up to date and show you the graphs and the spreadsheets of my progress towards my goals, what's happening in detail in the markets with these companies and with others. And yeah, hopefully we can go on this journey together towards financial independence, and seeing the whole economy get rewired by artificial intelligence and new technology, which is very exciting. So thanks, guys. See you next time.